Benim şeyi açabilirim. Welcome back, everyone. Could you please be seated? I have some administrative details to tell you. I promise it's going to be short. I hope you have enjoyed lunch, but I can assure you that the best is yet to come. I'm sure you're going to love dinner more. I have two things to say. First of all, I am assuming that you have received your gifts from us. They have been delivered to your rooms, I guess, last night. I hope you like them, but I have a little explanation about what they are and how to use them. One of the package was a set for Turkish coffee, and the other one is the Turkish traditional alcoholic drink rakı. Don't mix them, please. We usually drink the Turkish coffee after rakı, and rakı can seriously damage your health. It's 46% alcohol. Please drink responsibly. And the third one was a hammam set. Hammam is a traditional Turkish bath, and in the set there is this clothing specifically for hammam. We call peştemal. Maybe it's the same in some languages as well. And if you would like to join the hammam tour, you can just take them with you, or back at home. You can always use them in summer on the beach. That's what I do. I use my peştemal on the beach. And you can always use them after your bath. So we are hoping that you enjoyed your gifts. And if anyone hasn't received it, please contact my friends and they will just deliver it immediately. The second thing actually is an apology. In the program sheets here, there has been a mistake in printing. The panel members, the members who will be participating in the country reports actually has been here consecutively. The same names, you can see it in both sides of the country reporting. So we apologize for that. That's why on the second part of the panel, which we will initiate right now, I will first give the names of the institutions who will be presenting their reports, and then whoever's line comes up, I will again in advance tell the name of the presenter and the name of the institution. We apologize again for that consequence. And after the panels, there will be after the reporting, there will be a coffee break, and then there will be another keynote speech. And I will be informing you about the other administrative details in the meantime. So, thank you for being here again, and we will start the second session of the market reporting. We will have Korea Financial Investment Association, and then Mongolian Association of Securities Dealers, New Zealand Financial Markets Association Incorporation, Philippine Association of Securities Brokers and Dealers Incorporation, Association of Thai Securities Companies, Thai Bond Market Association, Vietnam Bond Market Association, and as the last one, our host, the Turkish Capital Markets Association, will take place on the stage. And the first presenter is coming from Korea Financial Investment Association, KOFIA, Mr. Ulzli Bayar Bold.
Yeah.
Oh, God, I just realized it. So let me do that properly. Sorry. Mr. Hong Yoo Kim.
Yes.
Sorry,
Thanks
apologies.
So much. Okay. My name is Hanjo Kim from KOFIA. Okay, so many thanks for this arrangement of this meeting. It's a beautiful scenery and good food and good conference room. So let me briefly summarize the current status of the Korean capital market. So I'll show you some statistics for the individual market by securities type and introduce the current regulatory issues and market issue in Korean market. Korean stock market capitalization in last year was 1,572 trillion Korean won, which is 17% lower than the previous year, while the outstanding balance of the bond is almost 4% higher than the previous year. Comparing to the Korea's GDP, the stock market cap is 83% of the GDP, and the bond market size is 100.7% of it. Okay, so equity indices of KOSPI, the regular main market, and the KOSDAQ decreased slightly. Outflows from the foreign investors was one of the main reasons of this decrease, but the turnover of those market increased because there were environmental change among the retail investors due to the incentives such as tax benefit from the government offered last year. In addition, the number of lists in both markets increased. The number of listed company in KOSPI 788, and the KOSDAQ market, the listed companies are amounted to the 1,318. Next is the bond market. The Korean bond market witnessed the overall increase the trading volume last year. For your information, last year, November, the Korean Central Bank, BOK, raised key interest rate 0.25%. But this year, BOK lowered the key interest rate 2 times. Now, 1.25 is our key interest rate level. It's the lowest level in our history. Maybe the uncertainty of the global economy and worries about the sluggish economic development led the BOK to decide this adjustment of the key interest rate this year. Okay, the next is the derivatives market. Korean derivatives market has been on uptrend from 2014 in turnover. Last year, the turnover of the OTC derivatives are increased by 8%. So issuance volume of the derivatives linked securities also increased by 4%. And also trading volume of the exchange trade derivatives like KTB futures and equity options was increased by 16% in 2018. Let me briefly introduce the current regulatory and market issue in Korea. Last November, the Korean government, FSC, announced the capital market reform measures to push for the enhancing the role of the capital market to support the innovative companies. To make it easier for the innovative companies to raise funds in the capital market, a solicitation to professional investors by a social network service and advertisement can be allowed. This has been adopted in Jobs Act in US 2012, and also unrated company can issue the asset-backed securities. Usually those innovative companies are very small. They don't have any credit ratings, but they can issue the ABS in Korean market. And FSC also introduced the exchange-listed business development company, BDC, which invests in the unlisted stock. So will be allowed. KOFIA is also participating in this task force to launch this BDC in the near future with our member firms. Secondly, to uplist the role of the professional investors, So our authorities is trying to expand the scope of the professional investors. We now consider the level of the financial account, but from now, the other factors are considered like their experience and their level of income also considered to be professional investors. Also, the registration process will be simpler. Currently, all individual professional investors have to register by themselves in our association, but from now, they can be registered by their brokers and dealers instead of that. And also, okay, we are still discussing the EU benchmark issue like other countries. So KOFIA is an administrator of Korea interest rate, 3 months CD rate. From last year, Korean FSC and FSS and BOK and KOFIA running the task force which aims at improve our current methodology to calculation of 3 months CD rate. And also we are discussing on the development of new benchmark rate, risk-free rate. I think the repo and call rates will be an option we can choose in the future. Personally, I think the discussion with the members within ASF and ICSA is very helpful to us to decide our domestic benchmark issue, and also sharing our information experience will be helpful, beneficial to all the members. Last but not least, Korean government released a guideline for the fintech business. Designated area of service will be exempted and waived from the FSC's regulation up to 4 years. That's all my presentation. Maybe the 대시길 애들음. Thank you.
감사합니다, Mr. Kim, and sorry again for my mistake. Okay, so right now we go with Mongolian Association of Securities Dealers with this time Ms. Ulzi Bayarbold.
Good afternoon, and first of all, I would like to express my gratitude, to Turkish Capital Market Association for providing us an opportunity to meet again in your beautiful city, Istanbul, and to meet each other, exchange our updates and recent developments on the market, and opinions on the further cooperation. So I would like to start my presentation with the macroeconomic data. So far, we are doing really good thanks to the increase of mineral resources, prices on mineral resources on international market, mainly increase of prices on gold, coking coal, and copper. So this year, as of Q2 2019, we have a GDP growth of 7.3 against what we had in 2018, 2.7. And in 2016, we had GDP of 1.2. And I think you remember me in Manila, yes? Standing there, very shy and reluctant to talk about macroeconomic development in my country. So this year we have 7.3, and at the end of this year it's expected to have higher than this. So about total budget, about the budget balance, so we have a surplus of the budget this year, and it's very ironic because when IMF comes into country, we have budget surplus. When they go home, we have budget deficit. So thanks to the extended fund facility program, with IMF, we have very strict or harsh control, from IMF side. So, and we cut the budget expenditure. There was a sharp a cut of budget, so we have a surplus now. Foreign trade, yes, we have surplus in foreign trade as well, and economy of Mongolia is really heavily relied on mineral resources, and 80% of foreign trade is compromised from export of mineral resources such as coking coal, gold, and copper. As of exchange rate, yes, we have relatively stable exchange rate against USD dollar and Chinese yuan. But 2 weeks ago, I think some of you may know that we are on the gray list. Thank you. And that together with Iceland and Zimbabwe. So, yes, we had several issues, and because we're a very friendly nation, we do business trade with Iran. We export lots of meat to Iran, and we do invite workers from North Korea. And because of that, we were warned by FATFA. And it's not only the reason why we're on the gray list, but, there were the reasons of few reasons why we are on the gray list. And 2 weeks ago, we had a little bit shock on exchange rate in Mongolia, but it's stabilizing now, and it's almost, and now it's almost at the same level as we had before. Inflation, yes, you see the increase of inflation. It's 9% now, but it's mostly because of activity in macroeconomy, coming back again. Monetary policy rate is 11% now, and 11% we have, it's very stable since 2017. And money supply, we see the increase of money supply and increase of total loans, total deposits, everything's increasing. And this is a very good indicator for us because, you see that, in 2016 we have minus foreign direct investment. It's opposite, we had outflow of foreign investment in Mongolia. But, since 2017, we see the increase of foreign direct investment in Mongolia, and especially in the capital market, which I will tell you about later. Yes, this is the capital market, the introduction of capital market. So listed companies as of Q3 2019, we have 198 companies. And now all companies, they comply with the regulation and the and rules of Mongolian Stock Exchange. They all comply, submit their financial report about their activity, business activities. And the number of companies distributing dividends are constantly increasing. And the average amount of trading volume is also increasing. And number of compliant broker is 52. And about the recent development of our association, for example, it was used to be the association of brokers, of only brokers. And now we extended our membership, and now commercial banks and asset management companies, stock exchange, securities central depository, and securities clearinghouse, they are also our members. So, we are becoming, so we became the sole industry association in Mongolia, which is recognized as a self-regulatory organization by the law on securities market of Mongolia. Last year, we had a record number of IPOs in Mongolia. No, it's compared to your markets, it's relatively small. But for us, it was like 6 IPOs. It was the record number of IPOs. And this year, as of Q2 2019, we have already 4 IPOs. And the most interesting part of 10 IPOs for the last 2 years, half of them are financial companies, like non-banking financial institutions, 2 insurance companies, 3 non-banking financial institutions, and they are all very actively, introducing fintech in their operation. You see in this graph the number of IPOs per year and the amount of fund raised through IPO. So you can see that, in 2019, we have 4 IPOs, but if you see the amount of IPO funded raised through IPO, it's increasing. This is the market capitalization, and you see that this year, for Q2 2019, we hit the record, of market capitalization. And top index, it's the main index of our Mongolian Stock Exchange. It's also stable. And equity trading, the volume, yes. And last year, we had also record number of trading volume in Mongolia, which is, it was like 45% increase compared to what we had in 2012. That was the peak year in Mongolian history. So we overcame that amount. And this is trade structure. So as you can see, this year it's dominated by equity trading and NOGA bonds, traded on Mongolian Stock Exchange. And currently, the association, Mongolian Association of Securities Dealers, are really focused on bond market establishment. And we asked, the government of Japan, and now in Mongolia, we are implementing a project together with JICA, Development Agency of Japan, on establishment of funding of bond market in Mongolia. And it seems that the advisor, who works with us, he was also, like a godfather for Thai bond market, Mr. Akamatsu. Yes, yeah, it seems like he's your godfather of your bond market. And it seems that he was also, very actively involved in Vietnam bond market establishment. So we are really happy, to have Japanese, colleagues coming into market and helping us. And I'm also, asking Korean colleagues, to help us, assist us in establishing of bond market, because we need to have this market, from scratch. And investor structure. And as you can see, in 2019, we have, investors who do more 35% of our total trading. So this is the increase, compared to to the previous year, 4 or 5 years. So this is very interesting number, and we're very happy. At least we can see now, a light at the end of tunnel. And mostly, these investors, foreign investors, come from Japan and Korea. And for example, Koreans, we know that, there are 2 funds, doing business, investing in Mongolia. And we have Japanese, which are also, became the influential investors in listed, just newly listed non-banking financial institutions. And they're also, very actively involved in bond market. But, we do issue a lot of private bonds. So, and now we need to establish a bond market, OTC market. So that's briefly, about the Mongolian market. So now it's turn to Paul. Actually, it's his bedtime. There is a 10 hours difference between New Zealand and Tokyo. Poor man. Okay, thank you very much for your attention.
Thank you, Ms. Bold. And now, as she said, it's time for the New Zealand, Mr. Paul Ottman.
Actually, just following on from what Uzi just said, I was lying in bed last night about 5 o'clock and wide awake and thinking there should be a prize actually introduced for the longest travel to the event, and also for the biggest time change. So I think I'd be pretty good at winning that each year. But anyway, thank you to the Turkish Financial Markets Association for the opportunity to speak today and to come here and meet with all you wonderful people. It's a lot of fun. So, look, I just want to touch on two key challenges that are affecting us in the New Zealand financial markets. Most of you will know that we're a relatively small organisation, but we do look after the key benchmark administration activities in New Zealand. And our other activities relate to the wholesale activities of the market. So market regulation is another key area, and those are the two areas I just want to touch on the very short amount of time. So with regard to New Zealand Benchmark Administration, we are going through a structural review. The NZFMA has historically been the benchmark administrator. However, with our application with the EC to have our benchmark recognised, we have an equivalence program to meet. That means we must meet our OSCO principles. It also means that the local regulator needs to show equivalence and regulate our activities through a licensing regime. So we have now embarked on a significant piece of work to review the structure of our benchmark administration, and we're sort of guided by what's happened in Australia. ASIC is a bit of a blueprint that our regulators are using, the licensing components, so we are working with them on that structure. So without sort of cutting to the chase, the structural review that we've done, we've looked at markets or benchmark administration around the other centres in Asia. We have decided to model ourselves pretty much on what Singapore, Hong Kong and Japan has done, and that means that we will set up a wholly owned subsidiary that will have separate reporting in terms of all benchmark operational issues up to a governance board, which will be made up of regulators as well as, in an oversight capacity I should say, an independent chair and independent legal advisors, etc. So we will effectively have two components to the NZFMA's operation. One, benchmark administration. The second component will be to run all the other affairs around accreditation, training and conventions, etc. So a large piece of work. It means we're going to have to increase our benchmark subscription fees significantly to cover the costs, but really in the absence of any other practical alternative, this is the way we're going to go. So that, I'll just go forward. Am I holding this around the wrong way, maybe? No. There we go, I've got it. Thank you. Okay, so if we just move on to the fallback benchmark development, part of our obligations under EU BMR is to have a fallback benchmark. Part of our obligations as a benchmark administrator is to have a fallback in the event that our IBOR becomes non-usable for any reason. So we have put together a working group made up of bankers, of users of the benchmark, the buy side, the investment community and the regulator, and we've come up with a fallback benchmark which is a risk-free rate, and that is the overnight cash rate which is used as a policy rate by the Central Bank of New Zealand. So in effect, the Reserve Bank will become the benchmark administrator officially, and we will manage the term and the credit structure of that fallback benchmark. So we are working closely with ISDA in terms of the credit and the term adjustments that would be required. In fact, New Zealand is going to be, we're told, the first non-critical benchmark to have an official ISDA term and credit structure applied to it. The interesting thing, however, is that we have this risk-free rate, which is the fallback rate, but none of the investment community or the banking community can see any product that could be that benchmark could be applied to. So that's the interesting scenario. So as David mentioned earlier, we're going for a multi-benchmark approach. So for all intents and purposes, the IBOR BKBM will continue to operate as our preferred benchmark. There will be a risk-free rate operating as well, but that, well, it remains to be seen how that will be used unless there's a major event with our IBOR. The LIBOR benchmark transitional issues, I'll just really touch on this by saying that most of our banks and large corporate and institutional entities have exposure to LIBOR as a reference rate, and so most of those documents are probably sitting in shoe boxes in the 5th floor of their building somewhere, and they really need to get a good understanding of what their exposures are so they can manage those risks that are associated with that. So we're going through a real big educational process and making our members and our buy-side community aware of the potential risks associated with LIBOR transition. As Mushtaq mentioned earlier, there is the potential for huge disputes, disruptions and significant litigation risk. And also there are tax implications with novation of contracts to different benchmarks, and these need to be addressed in each of the countries. So in the 32 seconds that I've got left, I just want to also touch, I'm going the wrong way, there we go. Just on regulatory reform, we have a whole new financial advice regime being implemented. This has been put forward by the conduct regulator. There's a big piece of work. It's got major implications for our banks. Anybody providing retail financial advice is affected. But it is an improvement on the old scheme, so we're certainly tied up in that. We have an issue with Australian regulatory reach into New Zealand, specifically the Foreign Financial Service Providers regime. I know that David's group have done submissions on this as well. And we are currently enjoying an exemption, but there is intent by ASIC to remove that exemption, and New Zealand banks will have a rather onerous and expensive compliance obligation to abide by to operate under a licensing regime. Lastly, ASIC have a set of derivative reporting rules, and again, because we've got bank subsidiaries, Australian bank subsidiaries operating in New Zealand, the legal entity identifier numbers that are required for all of our corporate clients of the banks becomes quite a costly issue and an onerous issue to apply, and a lot of our competitors that are not regulated by ASIC don't have to do this, so it becomes a competitive issue. But that's just another example of probably market fragmentation. But that is the presentation from New Zealand. I thank you for your attention.
Thank you, Mr. Atmore. And from New Zealand, we're going to Philippines now. May I introduce Mr. Ismael Cruz from Philippine Association of Securities Brokers and Dealers Incorporation, PASBID, please.
Not the Philippines. Can you put my first slide? Good afternoon to our hosts, fellow ASF members. Good afternoon, pleasant good afternoon to all of you. We are very delighted to be here in Istanbul. We're enjoying very much the natural beauty, the people, and also the rich history of Istanbul. And before anything else, I'd like to say thank you to our hosts and make a special mention of İlkay Arıkan for making this special effort and making everything possible. Thank you very much. So, my first slide is about the Philippine economic miracle. Let me explain again, I think I did before, why we use the term economic miracle. Because in the 70s and the 80s, Philippines was called the sick man of Asia. At that time, there were the Asian tigers. Hong Kong, Korea. China was not yet a major power at that time in exporting, but the Philippines never developed its export manufacturing. So we were named Sick Man of Asia. Our GDP growth in the 80s was only 2%. But since then, things have changed. We're no longer the Sick Man of Asia. And we're surprised that we're able to fashion our own style of development. What we did, what we had to export 11 million workers out of the country, who now produce for the Philippines $30 billion of remittances. Number two, we were able to develop the business process outsourcing. Major banks in New York, for example, do their back office in the Philippines at a fraction of a cost. If it takes a US major bank to do their back office at $1, it can be done in the Philippines for 10 to 15 cents. And number three, we were able to finally develop our export manufacturing, and we are exporting 65% of our exports are in electronic products because we have the English-speaking and educated workforce. So for all that, we had to fashion ourselves, and we're happy that all this talk about the Trump trade war, services are exempt from taxes. So our revenues from overseas Filipino workers, our BPO revenues are exempt from taxes. But we have no oil. That's a challenge for us. So anyway, the Philippine economic miracle continues, now spanning almost 4 decades from 1980. The Philippine economy has shown resilience with uninterrupted positive annual and quarterly GDP growth over the last 20 years, or over the last 82 quarters, respectively. Uninterrupted positive growth. This year, we'd like to think that we have a picture-perfect macroeconomy with 6% GDP and less than 3% inflation. Last April, S&P Global Ratings upgraded the country's credit rating to its highest ever in its history. We achieved a rating of BBB+. 5 years ago, we achieved our first investment grade rating, and since then we have been upgraded 2 times. So with a stable outlook, and we believe that this is a fitting statement to our so-called Philippine economic miracle. Next is we talk about the Philippine Next, we talk about the Philippine medium-term outlook for 2019 and 2022. The present administration, which has about 3 years to go, continues to be very ambitious and is now pitching for growth of 6.5% to 7.5% next year and 7 to 8% GDP in the year 2021 and 22. Such an ambitious program is based on a program of infrastructure which we call Build, Build, Build. 200 billion is scheduled to be built, and this infrastructure program will be financed by a higher budget deficit of up to 3.2% of GDP and a doubling of tax revenues over the next doubling of tax reform revenues over the next 3 years. We have also been able to lower inflation from last year, which was a record high of 6.7%, to this year of only 2.8%, mainly because we were able to improve on our food supply. One key reform was to liberalize the importation of rice, because before importation of rice was restricted, and now anybody can import rice. That brought down the food basket cost, and also the lower price of oil for this year compared to last year enabled us to do this. In addition, we have a new proactive central bank governor who has this year brought down the policy rate 3 times for a total of 75 basis points. And in addition to that, he has also brought down the reserve requirement. Our reserve requirement, I believe, is the highest I know in the world, of 20%. And now we're able to bring that down, 4 steps down, to 16% by December. So that is a big break for the banks. And now I'll go into some metrics of financial performance. I chose 3 financial performance metrics to depict what has been happening in the Philippines. We believe that we are the best performing bond market over the last 12 months because our 10-year bond treasury note has dropped by 400 basis points. And number 2, our Philippine bull market, which like S&P 500 is now running on its 11th year. We all know that the history of bull markets post-World War II is around 62 months or 5 years. So this bull market that we're seeing now is on a very well extended bull run. And we'd like to think that our bull market has been reborn or born again. Because we measure it's up 24% from the low of last year, last October, up to its high last July of 8,400. It's up 24%. And the third metric I chose is the peso appreciation. This year, we are able to appreciate against the almighty US dollar by 6.5% last July. A little bit too much, a little bit too strong. But we are seeing some inflows. We are able to maintain our FDI level of $10 billion. And we saw some inflows in the stock market. So based on those 3 metrics of financial markets, we're performing all right. And now about capital incentives. We have embarked on a series of capital market incentives, and these are recommended by the Department of Finance and already approved by the Philippine Congress. We will lower our corporate income tax from 30%, again, one of the highest in the region, to 20%. But doing it very slowly, 1% per year. In the next 10 years, it will go down from 30 to 20%. And next, we have also, I think we have also the highest stock transaction tax of 6 basis points in the region, at least. So this has been approved that this will be lowered 1 basis point every year, very slowly, down to 0.1 to 1 basis point after 5 years. And also the third and last piece of incentive for taxes is that we have an IPO tax ranging from 1% to 4%. And it's been approved that the IPO tax, which is a hindrance to new IPOs, we have only 3 or 4 IPOs this year. This will be completely abolished, the IPO tax. And further on capital market incentives, finally, I think we can get the REIT program rolling. I know this is nothing new to all of you, but we don't have a REIT. And it's a shame for us not to have a REIT. Although the law was passed 10 years ago, arguments about minimum public ownership between the regulator and the stock exchange. The regulator wants a minimum public ownership of 67%. And the law says 33%. So it was frozen. And finally, we expect it to have our first REIT this year with Ayala Land, which is a premier real estate company, maybe initially for $500 million. And the second incentive that we were able to develop recently is we have now a web-based online allocation for IPO. Every IPO in the Philippines, 10% is reserved for local small investors of not more than $2,000 per transaction. So before it was a problem because they had to open accounts, the retail market normally. They're new investors, they don't have accounts with brokers. So now they can do this online and web-based. That is a new incentive for the market. But like all markets, markets will not be complete without challenges facing us. We are always facing this challenge or problem for the brokers because we are being forced by the regulators, or it is in the law, in fact, that brokers can only own 20% of the exchange. You see, we are one of the oldest stock markets in the world, in Asia. Our market started in 1927 when all the brokers owned the stock exchange. So now we are up to 26%. We are being forced to comply. And these are challenges. And finally, to end on a positive note, we have also been able to arrive at the early stages of a green bond board in our bond exchange. We had a very successful IPO of a bond issuance by Ayala Corporation. And this is a green bond in compliance with ASEAN standards and regulations. So very enthused about this development, and that is a positive development. I'll close on that matter. Thank you.
Thank you, Mr. Cruz. And next, we're going to have two institutions from Thailand. The first one, we're going to be hearing from, okay, I worked on this, please bear with me. Protklao Rueang Nitutit. I'm so sorry if it's like, but you don't have an easy name, right? Like my name, okay. Please, the stage is yours. From, okay. They're from the Association of Thai Securities Companies, ASCO.
Good afternoon, everyone. My name is Protklao from Association of Thai Securities Company. First of all, thank you TCMA for arranging the fantastic event today. Okay, today I would like to share the major development in our Thai capital markets. Okay, the first topic is the revision and modification of the Securities and Exchange Act. And the second topic is SDG consideration in Thai capital markets. Okay. The revision of the Securities and Exchange Act. Early this year, Thailand has a revision on primary law that rules capital markets. Okay, the first topic, the first area is the establishing of CMDF. CMDF is a Capital Market Development Fund and is established as a juristic person. The initial fund came from the Stock Exchange of Thailand money, and it is the size. Initial size is around 180 million US dollars, and the Stock Exchange of Thailand shall make an annual contribution at the rate of not less than 90% of the net income after expense, tax, and reserve. The CMDF objective is to promote Thailand capital markets in the area of infrastructure development, building investment literacy for the public, professional development, and supporting related research and academic work. Okay, the next area is on the supervision of security business. The revision is to support financial technology firm. The SEC board has a discretionary to prescribe required paid-up capital that they think it suits for the business and nature and risks. Right now, there is no minimum amount of required capital for security business in Thailand. Okay, the next area is to improve the fiduciary duty of the asset management company. The revision of the law is indicate that asset management company must have a policy to prevent the conflict of interest in manage the mutual fund. And the next thing for asset management business is they revise the voting mechanism of the mutual fund project. The revision shall be made from the majority vote of total investment unit of the attending unit holder with the voting right. Okay, the next topic we would like to share is SDG in Thai capital markets. Since last year we did Bali Declaration, and I would like to share the development, SDG development in the past 3 years in Thailand. On 2017, the SEC has launched the Investment Governance Code, or we call it I-Code, for institution investor. The code is containing investment governance and principle and guideline. The I-Code is to assist institution investor in adopting best practice for responsible and sustainable investing that is best interest of their client. On 2018, the SET created Thailand Sustainability Index for the purpose of indicate the price of the sustainability company that pass the market capital and liquidity criteria. Right now, the listed company in Thailand, the sustainability index represent around 50% of total market capitalization. Okay, and in this year, 2019, listed company in Thailand is total 20 company that list in Dow Jones Index right now. Also, this year, the Federation of Thai Capital Market Organization, or we call it FEDCO. The FEDCO is comprised of 7 associations that related to capital markets. We launched the Thailand Responsible Business Network with the objective to drive business awareness and action in supporting to achieving SDG. This project, we have a soft launch next month. It is a kickstart for SDG for the FEDCO. Okay. That's all. Thank you for your attention.
Thank you. Oh, you need help? Okay. Now we're going to hear from Ms. Arya Tirana Prakaish from Thai Bond Market Association, Thai BMA.
Yes, thank you. Good afternoon. Now the update on Thailand's bond market. During the past decades, Thailand's bond market has continued to develop very rapidly. The outstanding of the bond market has been increasing during the past decade and now standing at around 79% of GDP, well balanced with that of bank loans and equity market. And its outstanding value now stands at around 13.3 trillion baht, which is approximately 450 billion US dollars. And with the government bonds and capture the majority of the total. And while corporate bonds came the second, accounting for around 27% of the total. In terms of liquidity, you can see that the average daily trading value of the bond market average around 91 billion baht, which is about 3 billion US dollars. And although government sector, the central bank bills and government bonds dominate the majority of trading, we have seen significant development of corporate bond market, both in terms of primary market issuance and secondary market turnover. For corporate bond market, the turnover continue to increase, now average around 5 billion baht a day, and while the primary market issuance continue to break record high every year, and we expect this year that the primary market of corporate bonds will reach 1 trillion baht this year, and the issuance of corporate bonds has been surpassing the primary market issuance of the government bonds already. In terms of fund flows, Thailand's bond market has been, the safe haven among emerging bond markets, and we see huge capital inflows coming into our bond market during the past recent years and making our baht currency stronger. This year, we start to see some outflows from the bond market, but unfortunately, the currency is still stronger. This year, we see foreign outflow around 75 billion baht, but the outflow mostly came out from the short-term paper. So it did not have any effect on the bond market, both in terms of bond yields and the movement in the bond market. In terms of the bond yields, we see the yield curve continue to flatten in Thailand, and we see that this year the 10-year bond yields has made a historical low in August, and 5 years stands as around 1.4, and 10 years around at 1.5%, lower from 2.5% from the beginning of the year, and now even lower than U.S. Treasuries. And with the rapid growth of the corporate bond market and the coming of the digital transformation, Thai BMA is now working on the DLT scriptless bond market using blockchain technology to upgrade bond market infrastructure and enhance efficiency of corporate bonds market. In Thailand, significant proportion of corporate bonds are held by individual investors, which keep the bonds in physical forms, in paper forms, so make the settlement inefficient. And therefore, in addition, there are also multiple registrars, which make it difficult to obtain consolidated information of bondholders. So this DLT corporate bonds project is designed to facilitate all participants, which include issuers, investors, brokers, custodians, and registrars, to have access to single source of bondholder information in a real-time basis. And primary market process will also be shortened. And the smart contract will help automate coupon payments and help monitor news and notification for bond trustee. And that will be the function of e-passbook for investors to get the consolidated real-time bond portfolio, even with different registrars. This blockchain project has already been submitted to the regulatory sandbox at the Thailand SEC, and we expect to see the first blockchain bond issue by December this year, and as the pilot case. Thank you.
Thank you. Now we're going to be hearing from Vietnam Bond Market Association, VBMA. Thao Thi Bech Ta, please.
Good afternoon. On behalf of Vietnam Bond Market Association, I would like to thank TCMA, Geohostis year ASF annual meeting. My presentation will be a brief introduction about Vietnam corporate bond market. Vietnam economic performance has been strong and the future outlook is positive. Vietnam has experienced consistent and exceptional strong growth over the past 3 decades. The security market has started since 2000, but had grown fast and sustained so with average growth of 25% per year. At the end of last year, equity market measures for 73.1% of GDP, and the bond market measures for 39.1% of GDP. However, as you see from the slide, the credit markets counted for 100% of GDP last year. That means Vietnam still heavily rely on banking sector to meet with the demand from funding side for company. Bond market in Vietnam. The bond market in Vietnam, especially the government bond market, had grown significantly over the past 10 years. You see, in 2009, the size of bond market in Vietnam is nearly 15 billion USD, and by the end of last year, is nearly 96 billion USD. In comparison to other countries in the regions, Vietnam behind most of other markets like Thailand, Malaysia, and Korea. Corporate bond market in Vietnam. Corporate bond market count nearly 10% by the end of last year. By June this year, the private placement segment is currently most active part of corporate bond market. 96% of corporate bond issuance is private placement, and only 4% is public offering during like last 8 years. Commercial banks and real estate companies are the main issuer for corporate bond. Most of corporate bond market, corporate bond in Vietnam are not listed. There are 27 bond quotes at Hanoi, Ho Chi Minh City's Ho Chi Minh Stock Exchange, and there are 2 bond quotes at Hanoi Stock Exchange. The total trading value is 1.7 billion USD, count for 6.7% of total market outstanding. The total trading volume in 6 months of this year is 900 million USD. The turnover ratio of listed corporate bond in Vietnam is already high compared to other markets in the region. Here is the issue for corporate bond market development. First, the demand and supply side. In Vietnam, a limited institutions investor base. The bond market in Vietnam continues to be dominated by local banks, both in government bond and corporate bond market. Insurance company, fund management company grow quite fast recently. However, the size is quite small. For supply side, limited big size of the company who issue bond frequency in the last side. Second, the regulation and regulatory framework. Inefficient issuance process for private placement. The requirement for issuer to announce the OC to investor and Hanoi Stock Exchange 10 days before issuance should be omitted. Weak disclosure requirement, limited access to key information. There is a need for bond information disclosure at Hanoi Stock Exchange, as Hanoi Stock Exchange now they are cited as the corporate bond information center in Vietnam. And there is also a need for mechanism for bond disclosure at Hanoi Stock Exchange as well. continuous disclosure framework should be included in the centralized corporate bond information center. The last one will be the market infrastructure and intermediary. There is no credit rating agency in Vietnam. Actually, the Ministry of Finance, they granted one license for one local rating agency, but this is a not reliable company. That's why Vietnam Bond Market Association, at the moment, we're working with 12 members who are willing to contribute the capital to set up the credit rating agency in Vietnam. And at this stage, we are discussing with some global rating agency to set up the local rating. Also, there is no pricing agency in Vietnam. Limited liquidity, secondary market trading. There is no centralized registrar and laboratory for corporate bond, and also like a trustee agents in Vietnam. Just one more point I just want to ask on investor education side. That is something we need to do in Vietnam as well. You know that the bond market in Vietnam, recently the retail investor also invest in corporate bond, and like investor protection, that's something VBMA we are working on. That is as my presentation. Thank you.
Oh, thank you, Ms. Ta. And as the final presenter for the market reports is Mr. İlkay Arıkan from Turkish Capital Markets Association.
Hello, friends. Okay. This problem of the tall guy. Dear friends, I'm really delighted to be hosting all of you in Istanbul. We have worked to make this year's ASF meeting as spectacular as the previous year. I hope you enjoy our program, of which you tested a little bit yesterday. You will have more tonight. I would like to now share with you the latest development in capital markets, our country. The major events so far as follows. Last year, investor anxiety based on the international conflicts resulted in Turkish lira depreciating sharply 30% in only August. Early general elections and geopolitical tensions further fueled the prices, and the inflation raised nearly 20%, which is the highest level in last 15 years. In 2018, the main index of our equity markets fell off sharply 33% in dollar terms. In September 2018, the government quickly introduced it as an economic program, and measures were taken to revive the economy. The positive reflection was the lira has moderately recovered in 2019. The annual inflation in consumer prices fell sharply from 20 to 9%, and the central bank reduced policy rates from 24 to 14 within 1 year. Under the new presidential system enacted last year, 4 new presidential agencies on finance, digital transformation, human resources, and investments were established. The Finance Office has taken over the goal of turning Istanbul into an international finance center. The Finance Office has taken the initiative to encourage dialogue and cooperation among various stakeholders in order to attract foreign and local investors and engage with multinational financial institutions. Islamic finance is also gaining a strong foothold in the world, and Turkey is looking to gain a large stake on this area. The Turkish capital markets remained resilient despite the recent challenges and thanks to its strong regulatory and technical infrastructures. Recent years shed light on the importance of capital markets in terms of diversifying financial alternatives. In this context, the government made it a priority to develop capital markets. In 2019, 2 companies chose to launch an IPO, our stock market. Moreover, public companies were able to raise 4.5 billion Turkish lira through the SPOs and right issues. The corporate bond market continues to thrive despite the increased volatility in interest rate. Assets under management have been rising consistently in the past few years. The Turkish government has introduced the auto-enrollment scheme with the private pension system in 2017. The system now serves over 5 million enrollees with 6 billion Turkish lira assets totaling. Assets of mutual funds also increased rapidly in 2019 with rising short-term interest rates. Both brokerage firms and asset management companies continue to maintain their high profit margin despite the recent difficulties in the markets. That's showing the adjustment capacity of our industry. We take great pride in supporting the capital markets in Turkey the best way we can. I would like to share with you 2 of our recent initiatives that I think are far-reaching in effect. We organized the first of its kind hackathon with a specific focus on capital markets in order to link into capital markets to IT sector. Going forward, we plan to establish a capital markets incubator in this area. Lastly, we are final stage of organizing our capital markets summit in Istanbul. Thousands visit the summit every year to hear the latest developments on capital markets. Our summit, the largest and the most influential financial event in Istanbul, will be held for the 4th time under the theme Transformation in Istanbul next week. This is the end of my presentation, and thank you all your kind attention, and thank you for all for honoring our ASF in AGM in Istanbul.
Thank you, Mr. Erkan. Ladies and gentlemen, we thank all of our members for their very thorough presentations on the country updates. And now it's time for coffee break, but we finished a little bit early, so we're going to have a 15 minutes coffee break, and we should be back for the second keynote speech at, excuse me, what time is it exactly? It's now 3:15, so we should be back by 3:30 if it's possible to listen to our speaker and enjoy your coffee break. Thank you.